Okay, my name is Ceazor. Run a YouTube channel about cryptocurrency. Basically, I like to understand things before I invest in them, in a sense that I like to know the fundamentals of crypto coins. I don't really do a whole lot of TA in my personal investing. I know the basics, but I don't, I don't trade. I don't really make choices based purely on technical analysis. So I like to understand the protocol. So I decided I wanted to research protocols. And then since I'm pretty good at articulating things and simplifying things down, I decided to make a YouTube channel. I'd seen some other people doing the similar things, and I was like, oh, that's easy enough. I can do that. And that's pretty much how it started. And that's why I do it. It's kind of selfish in the sense that I just research the protocols I'm interested in and just talk about them because I think I consider them for my own investments. And while I'm looking at them, I might as well make a video after I've understood things. Now, I'm not always 100% correct because, I'm human and I don't, I usually research a protocol in like one day, maybe a couple days, but usually it's not like I know the protocol for months and months or weeks even, crypto's pretty quick, right?
Yeah.
It's usually, usually I dive in for a day and then make a video about what I learned.
Right. And it's not feasible to fully research all these coins and make constant videos. You have to kind of skim through them. But yeah, thanks for sharing. I can kind of relate to that. I don't do any TA myself. I don't necessarily believe in it hugely. So I'm kind of coming from a similar situation. And from what I understand, because I did listen to your podcast with Gabriel, so you've been in crypto for about a year now.
Well, yeah, crypto since the March dump, pretty much. I got in like pretty much right at the bottom of the March dump, so it hasn't been long, that's for sure. Like I wasn't one of those lucky ones buying like Bitcoin at like $70 or something like that. But I got my first Bitcoin around $6,800. Now, not an entire Bitcoin, that would have been great, but I got it around then. I got in around that time with my first Bitcoin investment. I was pretty hesitant at that time. In hindsight, I would have dumped every single dollar I had into it, but you just move on, right?
Right. So if you don't mind me asking, what exactly is your profession? Do you work in business, or can you say very vaguely, or finance or programming? Because a lot of people, it's interesting where they come from and end up in crypto.
Yeah, I'm an English teacher, actually. I have a master's in linguistics. I teach English, and that's what I do, man. And I don't love it with every part of my heart, but I do it, and I do it well. And I think that's why I'm, suitable for doing tutorials, because I'm used to talking to people who don't understand English very well. So I'm capable of like what we call teacher talk, which is like simplifying things down or saying things in different ways to try to, create comprehension. Yeah,
gotcha.
That's what I do.
Yeah, that makes sense actually, because your videos, I can totally see it now. So I understand you're in Asia. So what country did you originally come from?
I'm Canadian by nationality, and I live in Asia now. I don't think I will go back to Canada unless something really drastic comes along and just makes me decide to go back.
Yeah, it's interesting. I actually know a few Canadian crypto YouTubers who have also moved to Asia, so it seems like kind of a common theme I've noticed. But anyways, thanks for sharing about kind of your more like personal life. I find interesting with crypto. So with your job and whatnot, how often are you involved in crypto? Because the thing with crypto for me is it's very like addictive. Like you have a hard time not being on Twitter or CoinGecko 3 hours per day.
Oh, I spend more than 3 hours a day in about the crypto. Like I said, I'm a teacher, so I have office hours, we call them. They're basically times where I don't have to teach and I'm in the office and I just have to be present. And even sometimes, you know, I'll have a class that's fairly autonomous, like maybe I've given them some task. You know, they need to talk to each other and collect data from each other or whatever, right? And during that time, I might, you know, pop open my phone and scroll through crypto, Twitter and so forth. But yeah, it is quite addictive, but it's useful. Like, it's not, you know, I'm not looking at pictures of pop stars, you know, promoting products or just talking about, you know, their dinner. So I think it's time well spent.
Right. Yeah, I would agree with that. So one thing I try and ask people is there's a lot of people who are in crypto where they're really focused on trading and making quick profits, but there's also people like me where I'm really focused on just building a better portfolio and managing my risk better and just like more taking like the long-term approach to things. I would assume you're kind of on the same spectrum as I am.
Yeah, like the way I look at it is I've chosen a few tokens that I consider to be my blue chips, and my goal is to just obtain more of those tokens. Now, I might do some, you know, what we, you know, in the field we call degen, right? I might jump into some crazy like pool. Like last night, I jumped into a pool that's 20% daily APY.
What
So
pool
like
is
that's
that?
crazy, right? And 20% daily. Oh, what pool is it?
Yeah, I can show
It's
it.
it's the new value DeFi pool on. It's a vault on Bjorn, Bearn, and it's the value, you know, value DeFi from the old Bjorn fork.
Yeah, I
It's
saw
moved
it
over
first
to,
launched.
yeah, it moved over to Binance Smart Chain now as well. Like I won't, maybe we shouldn't say moved over, but you know, expanded into Binance Smart Chain. And you know, I'm, you know, of course I didn't put every single dollar I have in there, but I'm pretty sure that that's not a rug pull, you know, exploitable or not. That's the risk, right? But I'm pretty sure that they're not, you know, a rug pull. Who knows? You know, don't quote me on it. They might, but you know, it's, to me, in my opinion, it's safer than, you know, some food meme from some nobody. You know, like these guys have been around for a while, and they expanded into Binance Smart Chain. So I expect it to be a little bit safer, right, than, like I said, like kebab or something that I haven't researched very well, you know. So
Right.
yeah, so I still do those. I still do degen stuff. I still do a little bit of speculation. I don't do a whole lot of like, oh, buy this token and hope for it to pump. I don't really believe too much in that, and I don't like to. You know, a lot of influencers, they also do. You know, they might be honest about it. They might say, you know, it's your risk, and but I've bought in this token or I've bought in that token and I believe in it, and they kind of, they're pumping it whether they, you know, they're shilling their token whether they intentionally doing it or not. And I don't really want to do that too much. Like I do hold some tokens, but I don't usually tell, you know, my community or my viewers to, hey, look at this brand new token I bought. I like to just explain the fundamentals of something and then let them decide if they want to, you know, want to take part in that or not.
Right. I do think though that for us, because we're at pretty similar audience levels, I don't really think we have the power to pump tokens. So I do.
No, you're right.
For me, like I'll talk about coins like very low cap coins because I know I don't think there's anyone with $1 million watching my videos. I'd hope not. If they are, it's like, what are you doing, man? But really, like, I get what you're saying though. Like I just on my stream, I'm pulling up the chart of APY.finance, and you can see if you watch my, if everyone's watching my channel, I think there's about 12 people watching, but that's cool. But you can see, I don't know if you're familiar with BitBoy Crypto, but as soon as he released the video, it went from $1 to $6, and you see it all the time, and it is a bit irresponsible. Like I think they should really not do that and more focus on larger coins. Or, but the thing is, you can't tell people not to cover certain coins. So it's kind of, I don't know. I do agree that it's not the most moral thing, but at the same time, it is a free market. So it's kind of
Yeah,
my stance on
exactly.
that.
Like, can you like what the what are the Wall Street boys did with the GameStop, right?
Mhm.
There's a lot of debate on whether that was moral or not, and I think that's the point of it, is that it's not completely a question of morality. Like, if you want to take part in some token that is going to pump and then dump because of this kind of, influencer hype, that's your choice, right? And you're taking on the risk of, holding on to it too long, right? But if you want to play it a little bit safer, then you can buy the blue chips that you believe in and so forth. So you can do both too, right? You can follow something like that and get into those early buys and ride it up and sell it at the top. I don't think it's a terrible thing, but it's got to be, people should understand it. Like, they should make it very clear when they're like, oh, this token's probably going to pump and then it's probably going to dump. So that when someone who doesn't really know how this works is watching this video and they're like, oh, this is the next Amazon. And then they buy it and then they turn off their computer for a week and they come back and they're wrecked, right?
Mm-hmm.
So I think they have to be clear on this kind of thing. There's one YouTuber that I watch fairly often, not so much for his token shills, but more for his humor and his energy. And that's Ivan. I'm not sure if you watch him or not.
Ivan on Tech?
Yes, yeah, Ivan on Tech.
I don't.
I enjoy
with him.
I enjoy his videos because of his energy and his laugh and his humor and he does supply you with important daily news that's relevant to us. But he also shills tokens as well, right? And I've heard in the past that he's a paid shield, so people are actually paying him to just mention their tokens. So understanding that is important, but ignoring it, and saying, oh, it's wrong and I'm not going to take part in that, maybe it's wise, maybe it's not. You know what I mean? That's a question for each individual. Should you take part in a shield pump and dump? That's your choice, right? But it just needs to be clear, I think. I think people just need to understand that, oh, I was paid to shield this token and it's probably going to pump because, I've got 2 million followers, and then it's probably going to dump too because everybody's going to take their profits because they don't really believe in the use case of it or so forth. You get my point, right?
Yeah, and I guess kind of to play devil's advocate too. I mean, this is something that the mainstream media does with stocks as well, and even the Wall Street bets thing. When I kind of look further into it, it's interesting. Do you know who Michael Burry is?
No.
He was the guy who did. Have you seen the movie The Big Short? The 2008 financial crisis.
Oh yes, yes, I know. Okay, the name didn't come back to me, but yeah.
Yeah, so he the whole Wall Street bets thing. I saw a year ago. I saw he had 60% or 40% of his portfolio with GameStop longs. So it's not just the Reddit group. There's also institutions doing it as well. And then if you look at bond rating agencies and stuff, it's not just in crypto. So everyone does kind of do it. But I myself am like you. I don't really wish to participate in it. I had this person reach out to me for sponsored content. I don't know if you've had anyone reach out to you for it, but it was for a token called Moon Token, where you all pool your tokens and they pump and dump it. But it's definitely an issue, and I do hear from people who have really gotten wrecked doing it.
I don't get a whole lot of approaches by people to pay me, and when people do ask me to pay me, I generally tell them one thing. I say, you tell me what your protocol is, I'll look into it. And if I like it, I'll make a video. And then if you like my video, you're more than welcome to send me a donation. This is basically how, because some of them just straight up say, hey, you know, like how much for one video? And then I tell them that. And then, you know, if I look into it and I like it, then I make the video. And I feel more happy this way because I don't feel like I have to worry about my honesty. You know, like if someone's paying you and you say something bad, there's a conflict of interest. You know, you have that interest like, oh, they've paid me, so I shouldn't really disclose that little like flaw or something, right? But if it's, you know, you like it, you donate to me, then, you know, I don't feel so much pressure. So I try to stay away from paid videos in that sense. I've done only one in the past, and yeah, I'm not going to comment on it too much, but yeah, I've only done one in the past. But I've gotten donations from several others in the past. But I don't think I would take part in something like, hey, you know, like explain this. But I have explained some, you know, tokens that are pure like Ponzi scheme, because I think it's important not to say, hey, go out and buy this token, it's going to moon, but to say, hey, like look at the mechanics of this Ponzi scheme and how interesting and well thought out it is. However, it's still, you know, they're still supplying nothing but Ponzi, you know. But I think it's important for people to see how it works and what the functions are, and then they understand. Because, you know, a lot of my viewers will comment on my video and say, hey, like, you know, it's a Ponzi scheme or it doesn't supply any like value. And I said, yeah, I know, but it's super interesting. And I think that's what intrigues me about these kinds of tokens. Like what was the, do you remember the name of that token a little while ago? That you have to lock your ETH in and it's perpetually locked. It can never come back out. And it creates a basement level for the token of the value of the token can never go below that because it always has like perpetual locked ETH. Do you remember what this was called?
The only ones off the top of my head that are like for sure Ponzi's are Hex, which I'd assume you've probably heard of Hex.
No, I haven't actually.
Oh, Hex is, if you want to, the guy behind it, Richard Hart, is the weirdest guy I've seen in a while. But Hex, it's a total Ponzi. It's just like you described it, where you lock your ETH in these bonds. And the thing with Hex too is the owner actually has, I think he owns 40% of the supply, and the market cap I think was like close to $1 billion at one point. It's absolutely crazy. And there's one called Wise as well, but it's very common. And I don't know if you remember the whole BitConnect thing, but that was kind of like 3 or 4 years ago.
No, I haven't really looked too much in the past. Of course, I do know certain things like Mt. Gox and stuff, and you know the really, really important things in the past. But a lot of the things in the past, I don't look too much. But I do know what you're talking about. It like all the stages and stuff, going on the stage and you know talking about the moon and getting everybody all hyped up and then just dump the whole bag, right? I do know which one specific you're talking about, but I try not to look too much in the past. I try to focus on things that are moving forward. Yeah.
Gotcha. So one thing I wanted to ask is there's certain people, like for example, Andre Caron. I'm sure you obviously know who he is. We're just reading their stuff, like just me following him on Twitter. I think like he breaks things down in a way for me where it's very easy for me to understand. Are there any people kind of similar to him where you find they have very easy to digest information that just kind of give you more value for learning DeFi?
Andre's kind of like I kind of see him on both sides of the spectrum. Sometimes he'll write an article, like for his Medium, like the one he did just 2 days ago, right, about saffron, right?
Yeah,
it's very easy to understand. It's very clear. It's very succulent. It's very succulent. Anyhow, it's very clear, right? And sometimes he writes things it's not so clear, right? Because he's got so many ideas in there and he's trying to put them all in there and make it short. So sometimes it's a little bit hard. But to be honest, I don't follow a lot of people like that.
Developers.
No, I talk to developers one-on-one. I have a Telegram community, not a community, but like I have a contact list of developers that I basically talk to. And, some of them I talk to on a daily basis. And, if I don't understand some contract aspect, I'll shoot it by them and see if they know. And I think that's probably my biggest source of understanding. But like news, I just like crypto Twitter to me is just, I just quickly skim through, and then if I see any kind of thing that looks kind of interesting, then I'll go to that protocol and read the docs. I find the docs is the place to go. I used to love the mediums, but the medium pages, the docs are so much easier. If there's not a good docs, then I tend to like just kind of leave it and come back later.
Gotcha. So,
but innovative stuff. I don't know. I don't follow anybody. Like, of course I follow Andre, but I can't think of anybody off the top of my mind that's really like, looking at things, digesting it down, and then reiterating it, especially in text.
Okay.
I wish.
Gotcha.
I should probably consider this.
The only other source really for me is there's a few people I follow, but have you listened to the Bankless podcast? I found some of the ones they have are pretty well done.
I used to. When I first got into crypto, I spent about a month or two with them, but I'm not a big fan of what we are doing right now, interviews. I find them to be very inefficient. Like it takes a lot of time to get the information you want, and then usually it's difficult to actually find the information you want. Like if you want to listen to like Bankless talking to who did they talk to the other day, yesterday or so forth? It's on the tip of my tongue. What's his name? The billionaire. The Maverick.
Oh, Mark Cuban.
Yeah, Mark Cuban. Yeah. So they talked to him, and I haven't listened to it yet, and I'm not sure if I really need to, because like I'm not more intelligent than Mark Cuban or anything, but I don't know if I will actually get a lot of value from that time. And I know it's going to take like an hour.
So you're just not a podcast person, really?
Yeah, I don't listen to a lot of podcasts. Yeah.
Gotcha.
I do listen. If I see the person on the other end is somebody who I'm really interested in, then I'll listen to it. Yeah. And sometimes, I'm doing dishes, I might listen to it, but I don't follow podcasts. And the Bankless community, they tend to do that all now. And I like tutorials more. I like to just understand protocols and not really hear so much about the people.
Gotcha. Yeah, that makes sense. So in following your channel, like in terms of percentages on your portfolio, are you pretty much all in on BSC now?
No, not at all. No.
Okay.
No, not at all. Like, in fact, the way I look at Binance Smart Chain is it's just a way for me to get more ETH tokens. Mm. Like I use, my portfolio is larger on Binance Smart Chain. So just because I've been able to grow it so fast, it's quite easy, right? Like to get that, like I said, like 20% APY on ETH is not only very hard to find, if not impossible, right? It's also very hard to do with a small amount of money. So I would have to have $1 million in order to risk, $20,000 on Ethereum. Do you know what I mean? To justify risking that much. But on Binance Smart Chain, I don't mind throwing $1,000 into this thing because the gas is going to be, so minimal, right? But, there's quite a few new blockchains coming out, and I'm really interested in them because there is the whole like, CZ gates, he can close the gates. And, there's more and more bridges coming around, but, I don't know. I've lost money I haven't lost money, but I've had money locked in 20 days. So I'm not a big fan of using that. But I do know why it was locked, and I do understand. Well, I don't know why it got locked, but I do understand why it took so long to get it out. Right. Yeah, I'm not. I'm definitely not all in on Binance Smart Chain. I do like the user experience, and I do like the protocols that I use there, and I do like the teams, and I'm not necessarily going to leave them, but I'm not going to sell my my Ether or my BTC for some token on Binance Smart Chain.
Gotcha. Yeah, I had something similar with the Matic wallet, or I guess it's called Polygon now, but I was farming on Matic with the Quick Swap. They had like a farming promotion for their Quick tokens. It went pretty well, but bridging over to Matic cost a little bit of ETH, but getting back was like $200 almost or something. So basically my tokens are stuck over there because I was testing, but I myself, I'm like pretty much, I have nothing on Binance Smart Chain. I haven't really used it too much simply because the whole bridge process for me, it's so tedious and there's gas to get in and out. And also having money where it's locked, where I can't, like say I immediately wanted to actually transfer my money to fiat, but having to go through the bridge and all that to actually get it to a fiat on ramp, because I can't use Binance here in the US. So it's kind of what has been deterring me from using it. It's nothing against the actual blockchain. It's just the e-liquid nature of it for me, because I really like the ability to transfer into cash if I need to.
You can just to, I'm not trying to shield the place, but just to give you a little more information, you can consider going via KuCoin and Terra. There's a bridge between Binance Smart Chain and Terra. It's quite useful. I use it regularly. It's very quick, easy, fast. And then there's, of course, the bridge between KuCoin and Terra, or Mirror, right? Mirror Terra. So you can consider that route, and then you don't even have to go through Binance Exchange. But you can think about it. Now it's going to have two bridges instead, right? But the other way would have two bridges as well, right? No, you'd still have to go into KuCoin, and then from KuCoin to Mirror or Terra, and then from Terra to Binance. So there's three, right? Three little exchanges. So there's a little bit extra, but it's an option. You can look into it.
Are you actually using Terra at all?
Yes. I farm every day on Mirror. It's fantastic, man. It's so cheap. It's so fast. It's so easy. And it stocks. So, the volatility is much lower than, stocks, they do fluctuate, they're not 100% certain. They're not 100% safe. But I think, Tesla versus US dollar is definitely more safe than, I'll just make up, sausage versus USDT, or you know what I mean?
Didn't they have a QQQ, like an ETF as well?
Yeah, they've got a few. I know they've got VIXI, and they might have QQQ. I'm not sure.
I think I tend
to look at which. Yeah, I'm pretty sure QQ's there as well. I tend to look at whichever LP is just giving the highest APY, and generally go with that to some degree. Like, I didn't do, GameStop is at the top, but I'm not gonna provide liquidity in GameStop US dollars, right?
Yeah, I wouldn't do that.
And same with AMC too. AMC is there as well, so I'm not going to do that one either. And it's up near the top, the highest performing APY. But I think it's pretty safe. It's in the sense that, the token risk itself. You do pay a premium because it is a token and it's getting sold in an AMM. So it does go up in price and maybe even down in price, but I've never seen it go below the peg, right? So there is that consideration. You do have to think about, if you bought top Tesla stock, you'd be paying, $60 more to buy it here, or 40 or whatever. You'd have to check it, right?
Right. Yeah, Mir is one of those I try not to look at it because people were shilling it to me in December and it was at like $1, and one of those I passed on, but definitely a very interesting platform. The whole synthetic assets thing, I definitely see a future for that. I don't know if it'll be on Mir though. Or do you think that Mir really has long-term potential?
I don't know. To be honest, it's a way for me to get more BTC.
So you're just a total yield farmer, really.
Yeah. Like every single Mir token I get, I don't immediately, but like once a day, I harvest all my Mir tokens, I sell them all for USDT, and then I build more LPs. And eventually, I'm just gonna probably sell them all. I don't know. I'll see how I feel in next week, and then the week after that. But like almost, the whole you were mentioned that like you don't like the whole bridge things. I think it's something that you kind of have to accept. Like it's until ETH 2.0 comes out, you gotta learn the bridges, in my opinion. Mm-hmm. There's a few of them. They are different. I tried to play around with going to what is it? Radium. What's Radium on?
Solana.
Solana, yeah. I played with that yesterday, and I was like, I got to send ETH, and I'm going to send my ETH into this Radium place. But there's a whole bunch of them now, and I think it's a good idea to at least look at it and learn one of them, or maybe two or three, and you get to spread your risk a little bit. Like I have risk on Binance Smart Chain, and I have risk on Terra just because they're unproven, right? And then you have Binance Smart Chain, the whole Binance thing, right? But being able to spread to different blockchains, I think, is a wise choice, and it's good to. I think these bridges are going to be important, and they're getting much more useful. Like it's not like before. Like when they first came out, it was a total waste of gas. Like I send my ETH up to this second layer place. I do a swap, and then I send it back. That's just costs you even more gas, right? Like it maybe it would be roughly the same because sending to a bridge is a lot cheaper than doing a Uniswap swap, right? Mm-hmm. But whether there was actually a point, then I don't know. But I think it's interesting to look at it and to learn it. Now, a lot of protocols might do it in the background. Like if I want to if you put just to throw an example out there, this doesn't actually happen right now, but I can see it happening in the very near future. And that is like, say you deposit let's just use DAI. You deposit your DAI into a Yearn vault, and then Yearn sends that up into Phantom blockchain, along Phantom blockchain, and deposits it into whatever, Compound or Aave that happens to be up there as well, connected up there. So you can it's kind of like a two-way road. You can go through the Ethereum road to take your tokens from Yearn to Compound or whatever, but then it can also go up and around through the cheaper way, depending on how much those bridges cost, you know what I mean? And yeah. It doesn't have to come down from the layer 2 or the second blockchain. It doesn't have to actually come down from there until they need it back in Ethereum. Do you know what I mean?
Yeah, no, I
So
understand what you're saying.
maybe Compound can just leave their funds up there and then bring them back down as bulk, like just like traditional like supply chains, right? You don't individually ship every single product. You hoard them up in a warehouse and then ship them together, right? They can do some sort of similar thing like that, depending on demand and supply and so forth. That's something they have to figure out. So I think, the user might not have to use the bridges if they just stick on Ethereum, but lurking around and sneaking around in the alleyways, you can make some good money. I don't want to call them dark alleyways, but like in these other blockchains or these other second layer things, looking around in there, you can save some money on gas and you can make APYs because there are opportunities.
Yes,
so I think
definitely.
It's important to look at it. I came to cryptocurrency in March, like I said, and I immediately started learning about Aave and Compound, and I looked at them. I just looked at them, and I was like, okay, how much is it going to cost me to put this in there? What are the APYs, and what am I going to do this with the tokens in there? And I couldn't do it. I don't have, $300,000 US in that time to stick in there and be like, let's try this, right? And now it's even worse, right? And then when I went to Binance Smart Chain, I started playing with Venus, which is, basically, Aave or Compound with differences, but basically the idea is the same, right? And I started being able to play with it. So I get like ideas about how to lend and borrow and how to utilize this tool much better now. I have a much better understanding now from actually doing it and then running into like little problems. Like a couple of days ago, I tweeted and I mentioned that I realized that I've borrowed money, I've opened positions, and then I've taken profit from those positions, but I took too much profit. So now my positions cannot pay off my debt. And I could pull out my collateral that I took profit in and sell that to pay off the debt if I wanted to close off my debts, right? But everything dumped. So I don't want to sell any of it. What platform
did you borrow on?
Oh, Venus.
Oh, you borrowed on Venus.
So
okay.
I haven't, I'm not at risk, but I was just, balancing my numbers, making sure I had enough positions open to pay off all my debts. And I realized that I didn't. So what I had done is I'd taken some profit one time and took too much, and then bought some BTC or Litecoin or whatever I bought, right, and stuck it in Venus. So then they all dumped. So now it's a bad time to sell if I were to want to do that. But you see, like this kind of thing I wouldn't have learned by reading the docs, by watching some whale play with his Compound wallet. You know what I mean? I would never have seen this and learned this and realized this is something you need to take into account, right? It's, taking that, it would have been much better for me to take that profit after the dump, even though even though now I don't have enough positions to pay off my debt, but at least I bought the dip.
Sure.
Do you know what I mean? When it does,
sorry, go ahead.
I'm sorry. And then when the price of those do go back up, I could then sell them for a profit there and pay off my debt if I chose to do so. I'm sorry. Now, what were you saying?
I was going to ask how the debt to collateral ratio is on Venus, just because I haven't really done much borrowing, simply because you really have to put a lot of collateral for your coins, really, and it just, in my opinion, it hasn't really seemed too attractive to me. So I was just wondering how it is on Venus.
Oh, it's actually pretty bad. It's currently 60%.
Whoa.
So you can only borrow. Yeah, that's the max. So I usually borrow about 40%, between 30 and 40% of my total value locked in there, right? Which is quite low, right? But like I said, I lock in my blue chips there, and then I borrow against them and use that to do the degen yield farming. So I don't want to borrow like, I'm definitely not want to sell my BTC to buy, sausage token, right?
Mm-hmm.
That's not something I'm at all interested in doing, right? But borrowing versus it is not such a terrible idea. I do believe in this particular protocol in the sense that, like, it's not as old as Aave or Compound, right? But it's certainly backed by Binance. Like, it's run by the Swipe team, which Binance owns, right? So if anything does happen, like if there's a liquidation event, price feed liquidation event, no. But if there's some sort of hack, I don't know. But I believe that Binance will do something about that. Perhaps, you know what I mean? It's definitely safer than something that's not backed by them, right?
Sure.
Yeah, the collateral ratio on that is going to 80% though. That's what I've heard most recently. I don't know if it's happened yet, so it'll go up to 80%, which is good. I still won't borrow that much, but it's nice to know that you won't start getting liquidated until 80%, right?
Right. Yeah. It's actually kind of interesting. I don't know if you've heard this theory that with the gas prices, people were saying that CZ or Binance is purposely congesting the Ethereum network. I don't know if you've heard that before.
Yeah, who knows, man? I definitely would not completely deny that could be true.
I mean, it makes sense, but how do you prove that?
Yeah, well, yeah, and even still, even if he just says, yeah, I'm doing it, it doesn't matter because he can do it. That's the important thing, like if he's not able to do it, then he won't, right? Like, it sounds shitty that if he is doing it, it sounds pretty bad. And it's definitely psyops, right?
Yeah.
But it should be he can't do it. It shouldn't be, oh, he is doing it. It should be, it's impossible to do it. But he can. So, I don't know. Maybe he can, maybe he can't. I'm not sure, right? Who knows, right? But I do doubt it to some extent because, like Binance is super whale, right? It's like a ginormous whale, right? But there are a lot of other big whales that have nothing to do with him. And they're all using it. Like, do you think, like, what was it, 2 days ago? Like, I seen like the minimum gas was like 700 on
Yeah,
Ethereum.
I saw that.
I don't think that was purely him. I think that was every single whale going, let's try to make some money off of this huge Bitcoin dump, Ethereum dump. And they just started things. And they don't mind paying, $700 or $500 to move, 200,000, or even, 2 million. They don't care, right? So they just did it, right? So I think that's kind of where that congestion comes from. But I wouldn't call someone a complete liar for saying that. Like, I'm pretty neutral about the whole Binance thing. Like, of course, people say, oh, it's not decentralized. It's, CeFi DeFi.
Mm-hmm.
And I agree it is, but it doesn't mean you should completely ignore it.
Well, people, they have this bias where they think they're in it for the technology and they're in it to decentralize everything. And if it's not decentralized, it's garbage. But I don't really buy that. I mean, we're all here to make money at the end of the day, but it is a valid point for sure.
And like if you even think about it, like Art of War, you know, like even if you are like a decentralized maximalist, why not use your enemy's resources to better your cause?
Sure. Yeah.
You know, like even do that. Now, there is risk, and I undoubtedly believe that too. And they are correct in this sense. You know, if you use Binance Smart Chain, you are taking on Binance risk, unquestionably. It's, you know, all the nodes are run by them, so I've been told, or so I understand. I could be wrong. All the nodes are run by them. The bridges are locked and controlled by them. So you have to accept that risk if you want to use it. And if you don't need to, if you have, like I have, you know, I have some whale friends that talk to me regularly. You know, they ask me like, they just got tons of money, right? But they don't understand DeFi completely perfectly, or they don't do the research because they've got tons of Bitcoin. Like they don't care, right? So they ask me, oh, what do you think of this protocol? Or how do I do this? Or da, 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 da. And they're on Ethereum, and I never tell them, go to Binance, man, save gas.
Right.
You know what I mean?
Yeah.
I never tell them this because they don't need it. Like they can put, you know, like always the other day, one of them's asking me, oh, should I stake this 80,000 CRV into the contract, you know, the curve voting contract thing? Should I stake this in there? And I'm like, yeah. You know, what are you going to do with it otherwise? You know, and then I explain to him how it works, you know, how he's going to get 3 pull tokens and stuff like that. But like, I'm not going to tell him, no, sell that for BNB and bring it over and buy sausage token. You know what I mean? Like,
yeah.
He doesn't need to worry about, like, of course, you know, he doesn't want to waste money on gas, but he doesn't need to worry that much. He's way better off in Curve than he is on, you know, other, you know, he doesn't need to take on the Binance Smart Chain risk of, you know, Binance and all that. So I don't tell him to, right? Or I didn't tell him to do this.
Yeah, no,
but when he asked,
makes sense.
Yeah. So I agree with them, you know, in a sense, but, you know, you have to do what you can do, right? Like, you know, if you have a Ferrari, then you can go on the Autobahn and race. But if you don't have a Ferrari, or you don't have a race car or whatever, then you got to take the side streets. You know, you got to ride the bicycle. You got to take the bus. If you got to take the bus, you take the bus, right? It's the same idea. It's just, you know, different people, different situations, right?
Yeah, no, it totally makes sense. So one thing I wanted to ask also is I've kind of found that from people I've talked to, I actually hold 40% of my portfolio in stablecoins, which I find most people don't do at all. What is your stance on stablecoins? Because I find, like, my mentality with that is it's like the classic 60-40 stock and bond split. I basically just apply that to crypto because I like researching coins a lot and learning, but I'm not confident enough and I just don't have the time. And also, I'm not someone who wants to be a day trader. I think day trading would not be a fun existence. I've gone through months where I have been day trading, and mentally, it's a nightmare for me. I'm not saying it ended badly or anything, but I would rather have a more passive portfolio where I can actually have a life, really. So, what's your stance on stablecoins, really?
My stance has changed recently, and it's as thus. In the past, I was like, why would I want to hold stablecoins? I'm giving up capital gains, right? I've basically decided that I don't want capital gains on 40% of my portfolio, right? And I kind of I'm in this farm or in this camp, right? But I do see the value of having stablecoins. Like, first of all, you can buy the dip if it does come. Like the other day, you could have bought some of that. I could not because I don't have a whole bunch of stablecoins, right? However, why not buy Bitcoin with all your stable coins, and then like, what are you doing with your stable coins? You probably got them somewhere, like in some sort of contract, like, I don't know, who knows which one, right? But you've got them somewhere yielding some APY, like 30, 50, 60, whatever percent, right? But why not buy Bitcoin or that token that you have absolute faith in, buy that all out, lend it on Aave, and then borrow the stable coins and hold on to those and use those to yield farm and those to buy the dip. You know, you'll come into the problem that I came across, where if you're using borrowed money to buy the dip, then you might have to sell what you bought in order to pay your debt in a case of like emergency, right? But I kind of don't. It's hard for me to convince myself to hold US dollar stablecoins, especially since I don't live in US dollar. In US, I don't pay for anything in US dollars.
Right.
And I live in a country that cryptocurrency is tax free, so I don't have to worry about, if I need money, having to sell my tokens and pay capital gains tax on the sale. Whereas you have to consider that, like if you're holding all Bitcoin and you need money for whatever reason, you have to sell Bitcoin and you have to pay tax on that, right? I don't have this concern, so that's probably a huge factor for me that other people do have to worry about. But I don't really like holding stable coins, but I do see the value. Like, why hold, if you're going to hold, like, I'm just going to throw a number out there. Let's say, $10,000 in your bank account because, you need money for a rainy day rent or your car breaks down or whatever. So you need, you're holding that $10,000 in your bank account. I would definitely, instead of doing that, put it into stable coins.
Exactly.
That's just a no-brainer. Yeah, That's just a no-brainer. But I wouldn't consider stable coins part of my investment. Like, because you're not going to get any, it's not an investment. It's a farm. Like, you're farming APY.
Right.
So it's a separation from investment.
You could equate it to like a bond almost. Sure. It's, for me, really, like because I hold stocks as well. I'm not just all in on crypto. Some people, they don't hold, or they nearly hold zero fiat, which to me, it's just too volatile. Like I'm a little bit more risk averse, I'd say, than the average crypto person, just because for me, I'm not looking to pay my rent or make money in that kind of way from crypto. It's more of like actually building long-term wealth. I'm just focused on over the next decade, or let's say 20 years, how can I earn the absolute highest average annual return? That's really all I care about. I don't care if I do 200% in 1 year because the next year I might do negative 50%. So I think that's, for me, that's why the stable coin approach kind of works out.
I see your point. Like, my day-to-day life, my rent, all that kind of stuff, or whatever you want to call those things, cost gas and gasoline, food, and all that, it's paid through my day job. And my cryptocurrency is like I don't want to say it's a game. It's not a game, right? But it's kind of like a game to me. I just do it for enjoyment and knowledge. And like, I figure, why not play this game and make money instead of playing, Halo or, any of these other games, like whatever, like video games, right? Why not play this one instead, and, make money and maybe lose it all but if you look at it like, oh, it's a game, then, you don't mortgage your house and put your money into it. because are you going to mortgage your house and buy like, the next, Xbox? No, right?
Right.
You
Yeah.
won't, right? But if you look at it like a game, then you'll be like, okay, it's entertainment. How much entertainment money do I have? Then you can kind of hedge your risk that way. You can kind of protect yourself from, going all in, right? And I don't think cryptocurrency right now is the best thing to do all in, because, it's great. It's awesome. And I believe in it. And I hope to God it's the future. I really do, because there's so much goodness about it. I tweeted the other day, I was like looking at Tesla stock, and I was looking on TradingView, and it's like current price, and then above it is like pre-price, right? Like pre-market.
Mm-hmm.
So, I'm like, my tweet was like, buy the dip. Oh, wait for us to sell it to our cronies, and then you can buy their tops.
Mm-hmm.
That's basically what it is, right?
Yeah.
And crypto's not like that, right? There is some VCs. There are, if you're participating in like new coin ICOs and stuff, right? Then there is that aspect in there, but you'll never be like day to day constantly screwed by the, like, what are they called? The certified investors. What are they called? The people who are allowed to participate in like ICOs and stuff. What are they called in America?
You mean in
certified?
IPOs?
Yeah.
I think
What
it's
are they
just
called?
accredited investor. It's something like that.
Accredited investor or something.
Mhm.
Yeah. You know what I'm talking about, right?
Yeah.
So like they're screwing everybody, right? And that does happen in crypto, but you'd be damn sure that I can buy and sell whatever top and bottom I want in crypto. I don't have to wait for 9 a.m. I don't have to do that. And I think it's fantastic. And, like, for how long has the bank been giving like sub 1%? Since my parents, maybe my grandparents. You know what I mean?
Yeah, it's garbage.
Now I'm not saying, like, I don't think the banks intentionally were super evil about it. Like, they do have a lot of overhead, and they do have salaries, and they did supply jobs to people. So it's not all evil, like, one guy in an office just cashing in. But there is some degree of that one guy in the office cashing in, right? Whereas in crypto, there are many projects that have absolutely zero of this. There's no one guy cashing in everything because he is the boss. You know what I mean? There are definitely projects that are like this. There are some that are, the team has, 40%, 50%. There are these tokens, but there are some tokens that are, whoever believed in it and took part, they have the tokens. You know what I mean?
Right. Yeah, I see what you're saying.
So I really think it's fair. I think it's great, and I really hope it is the future. I do, but I can see something like cataclysmic happening. It's possible that, like, the government just stomps it, or there's just
it could go down so
hacks.
quickly. Like it could.
Oh yeah.
You could wake up tomorrow and the market is in total panic and fear. That's why, again, I just feel like my strategy. That's going through 2017. That's kind of where I held my assets a bit too long. The market is very fragile, for sure.
Oh yeah. And that's probably why I shouldn't be doing so much borrowing and lending and stuff, because of this, right? But I think if I make sure I have enough positions, like in stablecoins or in something equivalent to a stablecoin, in stablecoins to cover my borrow and my debt, then I think it's relatively safe if I react quick enough. But yeah, like I live in Asia, and I wake up in the morning and I have to check And I'm like, oh, what did those friggin' Americans do today, you know?
Yeah.
And sometimes it's like, oh, thank you, America. And the next, sometimes it's like, oh, God, America, what have you done? You know, you took me from 40% to 60%. Now I got to like close my sausage LP. And
Yeah, I was actually, sorry, go ahead.
No, go ahead. Yeah.
I was just explaining that with the way my portfolio is set up, and I like really try to adhere to specific rules just because that's what works for me. And like I've already, like if you break it down really, like the average S&P 500 annual return is 9%. So really people who are making that in a day, like they don't have to chase these crazy returns. But for me, sometimes, or at least recently, when the market is going down, it doesn't, the way I'm set up, it doesn't bother me at all, because what I find the most satisfaction in, and what I really like doing, is just kind of like being first, just being the person who gets in the project the earliest and just having the time to really research projects and dig into them and find ones that I think are winners, like actually based off fundamentals and not hype. And when the market right now is so crazy, there's no time to actually go through and do the research before it pumps. But when it's more bearish, it actually will give me the time to go through and just set up my portfolio as perfect as I can. So that's kind of the perspective I take. It's a bit different, but I try and invest in projects that I can have a good bet that they will survive at least 5 years or so. Because I definitely am one of those people who think that, I mean, even 5 years from now, we could see 90% of the coins dying. It's just there's too many coins and there's too many clones, and I just want to pick ones that I don't have to worry about them becoming completely worthless in the future.
If you look at the hype cycle, almost all cryptocurrency tokens go through that initial pump dump, right?
Right.
Every single one and if you wait that out and then you use that dump time when everybody's like, oh God, right?
Yep.
Then to do your research, then you can actually find the ones that return to the all-time high or go beyond, right? So I agree with you that, missing that pump and dump and then waiting for it to go up is a good time to do research. And then I like the idea of buying something and holding it for long term. I don't really like to do a whole lot of speculating on like individual tokens, like governance tokens and stuff like that. I tend to just, farm APY and sell for Bitcoin or Ethereum or, some of the other large caps that I support, that I believe in, right? Or that I don't mind speculating on. Like I have a position in ADA, and I think that's pretty speculative.
Cardano?
Yeah, Cardano, yeah.
Yeah, I'm not really into it.
Like it's a big if, right?
There's so much hype around it.
But it is solid. Like it's not, like I said, it's not sausage coin, right? It's done properly. It's not a fork, but you're right. There's a lot of hype. There's a lot of like, almost religion. You know what I mean? Like it's almost a religion.
For sure.
The people who are, there and supporting. And the only thing I don't like about Cardano is how much they hate on ETH. I don't like that. I think, you can be better than ETH. You can improve on ETH. You can be actually a better choice than ETH, but you don't have to say that you're a better choice than ETH. You know what I mean?
Yeah, I mean, people are emotional about, virtual coins. It's ridiculous for sure.
Yeah, but I do like your, the idea of not, definitely not trading. Like I can't do that. I started my investing like knowledge learning. I took a course, kind of. We'll call it a course. It's quite good, but I took a course on like trading Forex, and just reading TA signals, buying, selling, going long, going short for a couple of days or whatever you, taking profits, setting strict stop losses and take profits, and having a plan and so forth. And I got wrecked. It was terrible.
Was it a Top Step?
And no, it was learn to trade the market.
Was it like a funded account kind of thing?
Yeah, like I what do you mean by a funded account?
For example, Top Step, what it does is it's actually like a very legitimate platform. I have a friend who actually pretty much makes a living off it, but it's for Forex and equities. You go in, you pay a monthly fee of about $300. If you pass their combine, what they call it, they fund your account. So, and then you keep 80% of the profit and they take 20. So the only risk you're taking on is that I think $300 monthly fee. But my friend, he has like a $80,000 funded Forex account. So I haven't done it myself, but I want to eventually just for a month because it'd be kind of a fun experiment. And again, you can trade a good amount of money for pretty low risk.
Oh, so it's leverage in the sense.
Yes.
You get leverage positions. Okay.
Yep.
Yeah, like I had a leveraged Forex account. I did have a leveraged Forex account. It was leveraged, but it didn't have this kind of funded and like monthly subscription thing. It was just you deposit your money in there and we'll let you leverage it, and then you get liquidated, It was just basic like any other kind of trading platform, right? But it used it at MetaTrader, so I was like all over MetaTrader and stuff. But I got wrecked because I just didn't have the patience. I didn't have the level of control to stick to my plan. I'm pretty I like to run around and look at new stuff and go and click on. I like to explore new things, and day trading Forex is not for me. That's for sure. So I didn't get wrecked, I didn't get wrecked in the sense that I lost like $1 million or something, but I lost all the money I put in there. So I have decided that in crypto, I'm going to believe it's the same as Forex, if not worse. So I'm not going to do it. I'm not going to speculate. I'm not going to trade. Like I said, all I care about is the few blue chips that I really believe in. And
which are those coins?
For just a few, I'm not going to tell you everyone, but Bitcoin, Ethereum. I'm a little bit on the fence now about Ethereum because of all of this stuff, but I still think it's gonna hold out, right? Because of things like grayscale and stuff like that. They're not going to let it go to zero, right? And so Bitcoin, Ethereum, Link. Those are pretty much the top three. And then after that, I would say, then I start going a little more speculative, like ADA, Litecoin, YFI token. And then that's about it. So to be honest, when I'm taking profits, the first thing I consider is BTC or ETH. And then if they're both in a top, then I'll look at Link and YFI maybe. And then if those are also in a top, then I just don't take profits. I just leave them in the position and wait for another dip. Now, these are not 25%. No. They're my ETH and my Bitcoin heavily eclipse the Link and the YFI token. And the YFI token is a little bit of a pain because you can't use it as collateral in some places like Venus. It doesn't accept YFI. So yeah. And I consider sometimes BNB as well, but I don't know, man.
I wouldn't buy it right now.
No, definitely not now. But And I wish it wasn't the way it is now. In honesty, I wish BNB just stayed down like a stable coin. I wish gas coins were stable coins.
Yeah, I think that you
Because
pay fees in ETH and BNB rather than the native asset you send it in. That's always something that's, I don't think anyone enjoys that.
no, it's terrible. Like if it was like it could be BNB, but if it was just pegged to a certain value at all times, then you would never be like, like if you go to like, what is it, WTF.eth or
Oh, I can't look at
ETH.WTF.
that. I
If
can't.
you go to that and you remember, like, like a few months ago, you were buying, you did a transaction and it cost you like $15, and you look now and it cost you actually $70.
Yeah.
And you're like, damn, like that's rough. And I just wish that ETH or gas, not necessarily ETH, but I just wish gas was paid in like USDT or something, like something just flat. Now, that would then drastically like mess with the value proposition of ETH and of BNB. So that's a different problem, but it would be nice if I knew that every time I pay gas, I'm just paying, this amount of US dollars, whether it be, $2 or 50 cents or whatever, right? And that's the way it is on Mirror. On Mirror, you pay in USDT. You pay gas in USDT.
Or is it USDT or UST?
Oh, sorry, UST, yeah, UST.
Okay,
Which is
that's
Terra
what I
US
thought.
dollar, right? Yeah, did I say an extra T or a D? Yeah.
Yeah,
UST.
no worries, you're good.
And it does trade at a premium, so it's above peg, right? But it's not gonna go to, $20,000 or even $1,000. It's going to stay within $1-2. So that's, to me, I like that. It's predictable. It's under. But it doesn't. It also has the problem of it doesn't incentivize miners as well either, right? Like a miner or someone who's even running, proof of stake.
Sure.
They like to get assets that are, growth assets, not, straight dollars. Like if you put into a vault or some sort of like investment package, do you want to get paid in, USDT or whatever stable coin? Probably not. You want to get paid in the token that you put in there, right? That's the whole point of it, right?
Mm-hmm.
So maybe this is it can't happen. Just the ecosystem cannot work that way, but it works that way on Mirror. Now, I'm not saying Mirror is the best place in the world, but I like this aspect of Mirror.
Yeah, I need to look into it more, but I'm kind of like, I've been making 1 to 2 trades per week, which that's kind of why the gas fees aren't too big of a deal, just because I'm trading at a very low volume. And also for example, one of the coins I really like is Mark. I've talked about it on my channel. I don't know if you're familiar with it, but I utilize.
No idea.
Benchmark protocol. It's a rebase token that I'm super into it. It's like one of those coins that you just I don't know if you're like me, but you kind of have a romantic thing towards certain coins almost. But not to get off topic, the LPs with it. So for me with the LPs, you're kind of the opposite, where you're just chasing like the short-term yield. On the Mark LP, so for example, the USDC one, the APY is pretty high. I think it's like 120%, but I talked to the team and those rewards should stay for 3 to 7 years, which is very good. And also the rewards, they don't rebase. So they don't really advertise that, but that's for sure not the only, but the biggest LP position I have, because it's long-term for me and the rewards don't rebase. So I can assume they'll always equal $1.40 because it's pegged to the SDR. And then when it goes over that. So when there's a positive rebase and it goes above peg, I can claim my rewards and actually sell at a higher rate. So it's interesting to me.
So the rewards are paid in bonds.
The rewards are paid in the Mark token.
Okay. So you supply Mark USDC to the LP, right?
Yes, then you stake the LP token.
And the Mark token is pegged to US dollar, right? It's as a rebasing token, right?
No, it's pegged to the SDR.
STR.
SDR. The SDR is a reserve asset. It's a basket. So it averages out the dollar, the yen, the pound, and like 2 other currencies. So it's basically
an average. I know what you're talking about.
Yeah.
Yeah. It's like an average of all the world's currencies.
Mm-hmm.
It's called SD or ST, like tango.
It's called special drawing rights, so SDR.
Oh, D. Okay. So how does it rebase? How does it when it goes below peg? How does it correct it? And when it goes above peg, I assume they just mint more tokens.
Well, I mean, are you familiar with Ampleforth at all?
Yes. I'm actually I did a video a little while on $, and they follow basis. But I do know Ampleforth, like basically dig, right?
Sure. So the thing with Mark, so obviously it's different than Ample because it has the SDR pay, which, okay, you can argue the peg's better because it's not the US dollar or whatever. That's not the big deal. Their rebase like prediction model is different because if they're below peg, they can actually have a positive rebase because are you familiar with the VIX?
Yeah, a little bit.
The volatility index,
VIX, right? Yeah. I'd like to understand better, but maybe you can explain it a little bit better because I do understand a little bit, but I don't have a clear understanding.
Sure. So I'm no expert on the VIX myself, but basically it's like a fear indicator, right? It's a forward-looking 30-day model on options. So it predicts volatility in the market. So like if you look at the VIX on a chart, you see massive spike right when the 08 crisis happened, right when COVID hit. It basically predicts massive periods of volatility. So what Mark does is they incorporate the VIX into their rebases. So if they see spikes in the VIX and they're supposed to be having a negative rebase, there might actually be a positive rebase. And it's a really new coin. It's a market cap of only like 12 million, but eventually they're going to incorporate a like lending and borrowing space for rebase tokens. And the idea is that by having these predictive rebase models, it can help with the whole like liquidation aspect of loans. It's kind of a more complicated subject, but I just thought it'd be interesting to tell you about because I thought you might find it to be cool.
This is interesting to me. I'd like to understand it. Like I understand that like you're no expert, and I do appreciate what knowledge you do have to give to me. But this is the way I look at it now, the way I understand it. And if the price goes above peg, they mint more tokens. They give them out, people sell them, and the price goes back down. That's the idea of any rebasing token when it goes above peg, right? When it goes below peg, do they pull out of your wallet, or do they sell bonds?
They pull out of your wallet, so everyone loses tokens. But I mean,
but they hold the same percentage, right?
Yeah, it's non-dilutive.
Yeah. So and the reason the rebasing calculation is based on the VIXI, not on the actual, the percentage. It's not just some random number chosen by the community, like 3% or 10% or whatever. It's an actual calculation based on the predictive volatility of the entire money supply. Like, I don't understand the VIXI. Is the VIXI a prediction of stock values, or is it a prediction of
S&P 500? But I mean, crypto, people like to think Bitcoin's a hedge, but I mean, I guess it's a hedge against the dollar. But if you look at the S&P 500 and Bitcoin, they're pretty correlated. But if you look at Ample and Bitcoin, they're almost uncorrelated. That's kind of why I like rebase tokens, is I if you do look at them historically, they do kind of have almost an uncorrelated nature to Bitcoin, because everything's correlated to Bitcoin, really. It's kind of the thing for me, is because if you diversify your portfolio, but everything's super correlated, you're not really doing anything.
Yeah, I get it. You're just changing apples for crab apples, or Granny Smith for Red Delicious, right? They're all apples, right? But if you do go to oranges with, I agree with this, because I just noticed this the other day, actually. During the Bitcoin dump, everything dumped, everything dumped. However, my rebasing coins did not. They did not go below peg. And even the boardroom tokens, they're not governance tokens, but they're the tokens that you need to stake. The people who stake this token get the rebasing token. It's you know what I mean? So it doesn't go into people's wallets. It goes to the people who hold the boardroom token, right? So even that didn't dump. So I agree with you that they are uncorrelated to the markets in that sense. They seem to be, at least, based on my very rudimentary experience and watching, right?
Well, Ample is, I think, like 0.2 to BTC, which is 0 would be uncorrelated, right? So it's, and comparing it with the chart, that if you go to ampleforth.com, you can actually, or .io, whatever it is, you can see they have a correlation heat map, and Ample by far is way less correlated than any other crypto to BTC.
But I don't understand why they're using the S&P VIXI price to predict. Wouldn't they want to use some sort of
they use
currency?
They use the SDR, right, as the peg, and they're going to eventually have an actual stable coin of the SDR, which I'm not sure how they'll incorporate it exactly, but so they use the rebase model is similar to Ampleforth. It's a bit different though. For example, if you're farther away from peg, the rebase will be more dramatic, but they also incorporate the VIX. It's not just based off the VIX. If you look at the Ample chart, there's obviously that crazy pump of Ample because it got so far away from peg, and everyone was like, okay, positive rebases, and jumped in. That probably won't happen with benchmark. So it's a bit different, but to me, it's one of those coins that just makes sense to me. And with the LP, your rewards, again, aren't rebased. So you're never going to get those negative rebases. So it's kind of for my style of investing, it's almost like the perfect LP. Now you do get some sort of impermanent loss, but you do hedge your risk having that USDC pair.
I see. Yeah. When you say that the rewards are not rebased, that means they're locked in contract, waiting for you to claim, and then after you claim them, then they will be included in the rebases.
Yes.
Correct?
So you have to time it, because the rebase happens after the stock market closes at 4:30, between 4:30 and 9. So if you were to claim them right during that period, you wouldn't be playing it right, but you can claim it when it's not rebasing and avoid, or when you do that, you should claim it when it's in a positive rebase territory.
Yeah, I get it. Yeah. I see. You can claim it when it's in above peg, right? You want to, so that you don't actually lose tokens.
Yep.
I see.
And they just added BSC recently too, so it might be coming over there.
Oh, really?
Yeah, they're they're on Polygon, BSC, XDAI. They're really trying for cross chains. So maybe I'll move over to BSC.
Get everywhere.
So
yeah, I think that's interesting. It's currently only on Ethereum, right? But they're trying to migrate, or not migrate, expand, right?
I think they've actually done it, but I don't think there's any liquidity over there. I think there's actually a BSC version, or you can bridge it, but there's no liquidity, so you wouldn't want to do that.
Yeah, I get it. You'd have to wait until some whales support it, right?
Yeah, or it's incentivized or something.
It's interesting. I at first, when I first started looking at the rebasing tokens, I was just like, this is crazy, you know, like, and then you do see like, you know, tweets about like they all go to zero, right? And they do go to zero because people don't utilize the functions that keep them healthy, right? Like Ampleforth is different than, you know, the basis token. Do you know how it works?
I've never looked into it. There's too many clone like rebase tokens.
Okay, well, it's quite different than Ampleforth. Like Ampleforth takes and gives, right? But these ones, they don't take. They never take. They just give. So they only mint more tokens and give it to people when it's above peg. But when it goes below peg, they sell what are called bonds. And you buy the bond at the current price peg. And then when it goes above peg, it sells at a premium. So like, let's say you bought it at 60 cents and the token returns to $1, you can sell the bonds for $1, 10 cents, something like that. Now, those numbers are not accurately perfect, but you get the point, right? And the reason why Basis failed, in my understanding, in my opinion, was those bonds had a 2-week window to cash. So people did not buy the bonds.
Oh,
they were
wow.
like, what happens in 2 weeks when I can't cash them in?
Yeah.
So there's another protocol that I really like. It's called BDO. I have several videos on it if you want to
I'll
take
check
your
them out.
time to watch them. It's BDO. I have several videos on it. You can just look for the one that has like, 50 million APY or something like that. There's a green. Anyhow, so I explain how it works there. But in essence, they fix this problem by saying, bonds never expire. So people actually hold the bonds, hoping that the peg will keep going up. And then when it goes to like $30, like 1.3, then the bonds just start getting dumped, right? And people just selling the tokens, right? And it brings it back down. And it's actually functioned quite well. I'm very happy with it. I obviously wish, in hindsight, I had aped more into it, but you can't do that, right?
So it's kind of like the users control a rebase.
Exactly. Well, the rebase is the amount rebased is not really controlled by the users, but because when they buy the bonds, then they're burning the token, right? So the users control the propping back up of the peg, but the protocol itself decides how much to mint. And I can't remember the percent. I think it's like only like 3% each epoch, but each epoch is like 8 hours because it's on Binance Smart Chain and there's no gas worries. So they can just pump them out. They don't have to worry about how much it's going to cost so much for all the people, right? But yeah, it functions quite well. I'm enjoying it. I think it's pretty good, and it's given me a different look on the whole algorithmic stablecoins. When they first came out, I was just like, oh, this is crazy, like this is asking for trouble, and I didn't understand them very well. And then I started hearing all these ones going to zero, not working. So I kind of like shunned it, right?
Right.
But, I think it's, even, I don't know how Frax works. I haven't looked into it. But
I actually really like Frax.
And I've heard this one is also functioning quite well.
It uses collateralization and their algorithm, but for trading it, like, how Frax is the FXS token, the Frax shares?
No, I have no idea. All I know is the name Frax.
Okay.
I haven't looked into it. Yeah.
They have some good yield over there. I'm a fan of Frax. I like how it works.
I should probably look into it too. But to be honest, I haven't really looked too much into projects on Ethereum. I do kind of, still look at stuff and, do videos. Like the other day I did MStable because I feel they've been around for a long time and
they're solid.
and they're solid. And I didn't know what made them different. I'm like, well, what's the difference between MUSD and GUSD? You know, why, what, or, you know, USDC, you know, why are they different? So I decided to look, and I liked what I saw. It's interesting, you know, so I make a video about it, right? Like, I got intrigued and decided to look deep, right? Because it was interesting. So I should probably, you know, look at Frax, but at the same time, like, I don't think I will participate in it because I don't have enough money to pay for the gas on ETH. You know what I mean? When I can just do like my kind of algorithmic stablecoin degen stuff on Binance Smart Chain. Do you know what I mean? Like,
Yeah.
it's kind of like, you know, the apples are apples, and if I can get them, you know, delivered much cheaper, then I'll use the cheaper delivery service, right?
Yep.
So,
Are you on a Avalanche or Polygon or anything, or?
no, the only blockchains I've done anything with is I'll go from the most to the least, and that is, like, I'm not going to include Cardano because there's nothing to do there, right? But Binance Smart Chain I use the most. Like, of course, ETH is, you know, not included in this either, right? So Binance Smart Chain is the most. I use Terra every day. I set up my wallet for FTM, Phantom, and I did buy some tokens, and I do plan on doing another video very soon on using some features in there, but there's nothing there yet. I looked at Solana. I made the wallet, and I also made the wallet for XDAI. But again, I haven't seen anything on XDAI. You know, I got an email the other day like, hey, come claim this airdrop. And I claimed it. It was just like an NFT or something. I don't know what it was, but it's just like, oh, thanks for the badge. Right?
Are you, oh, sorry, go ahead.
And that's it. Oh, and ZK Sync, of course, too. Like, you know, the Gitcoin, right?
Which coin?
Gitcoin. You don't know Gitcoin grants?
I have a Gitcoin grant.
Yeah. Well, people can pay you with ZK Sync, right? They can use ZK Sync, which is a layer 2 like use case where they can pay a lot less gas. And you don't have to set it up. Well, you would have to set it up to claim them, right? But yeah, it's pretty easy. Yeah.
I think mine's set up for just Ethereum. I didn't know. I saw that.
Both.
Oh, they can use both.
You should probably, if you did, like, if you were part of the last Gitcoin like grant, you should probably go to ZK Sync, like when we stop talking, and just connect your wallet. You might have some coins in there.
Oh, okay. Great tip, man. Thank you.
Yeah. Like, people I gave most of my grants, the people who I gave grants to, through ZK Sync. And a lot of people will. Because why? Why pay gas? I mean, you don't have to.
Yeah, totally.
But you're matched. You know, when the Gitcoin matches you, that'll come through Ethereum. It comes in a lump sum, right? But it won't go through ZK Sync. So that's just full of tokens people actually sent to you.
Okay. Yeah, great tip. I don't really know anything about Gitcoin. I just made one because it seemed like a good idea.
Well, yeah, it's leaving money on the table otherwise, right?
Sure. Yeah. Yeah, people were telling me to set up an address, and I was like, all right, I'll do it.
I think it's fabulous. Like, it's the way donations should be set up, in my opinion. Now, it could be maybe tweaked to be a little bit better than it is, right? You know, little features here and there. But the whole idea of, like, you know, large organizations donate their money to the Gitcoin, right? Now, they're usually protocols, you know, Badger, Yearn, all these people, they send a whole bunch of money there, right? And that money is held in escrow and then given to you guys, us, based on when other people give us money. So if someone gives us $1, then the escrow will match that dollar with a certain amount. It's there's a, what's it called? A growing number. I can't remember the term for it. right again on the tip of the tongue. Like if the first one is 1 to 1, $1, and then the second was 1 and 2, and then 1 and 4, kind of like this, right? So those large protocols like, Badger, they don't have time to like say, oh, you're worth this much, you're worth that much, they just say, oh, here, Gitcoin, here's a big chunk of money. Let the people decide who should get how much of my money. So people vote for you by giving you $1 or $2 or $5 or $20 or whatever they want, right? So they're voting for you to get a piece of the huge pie.
Yeah, that makes sense.
And it's way better than like, oh, like they don't have to do much research. The organization doesn't have to have a department like, hey, let's scope out who's doing well. It just, whoever, let the people vote, like we think this person, this person's contribution or the production that they produce, it's not just YouTube, right, is worth, money. So they get a piece of the big donation. And I think that's the way, it's great. It's like, it's good for everyone,
Yeah, that's a good system. Thanks for explaining it. I didn't really know much about it.
The only problem with it is that it comes in seasons. So like the other day, someone asked me, hey, what's your Gitcoin? They wanted to give me a donation. And like, what's your Gitcoin grant page, right? And I told them, well, the season is closed right now. So you couldn't send me, you can still send me, but it won't be matched. And they're like, oh, really? And then I'm like, yeah, so take that into consideration, maybe wait or don't wait. It's your choice, right? But you know what I mean? So it's not an ongoing thing. It's that they don't match forever. It's, I think it's twice a year or something. I haven't actually done my due diligence on when the seasons happen and how often, but I think it's twice a year, maybe.
So there's there's matching seasons for the grant. Okay.
Yeah.
Had no idea about any of this.
Yeah, I think it's useful. It's important because I don't know. Like, are you monetized on your YouTube channel?
No, not yet.
Yeah, it's moot. Like unless you're like.
Are you monetized yet?
Yeah, I am, but it's I don't even consider it like. It's like it's like when you have like you have a protocol, you have like some rewards invested in there waiting to be claimed, but it's like $1.50, $1.50 worth of like, I don't know, I'll just make any random token, like value DeFi token. I got like $1.50 to claim on Ethereum. What am I going to do with this, right?
Mm-hmm.
It's going to stay there forever, right? So it's kind of the same with like, like I don't really consider the YouTube channel as a job or as a form of income. It's like, if Google's going to give me a few pennies here or there, then that's great, awesome.
Sure.
Yeah. And that's why, maybe, I do know that YouTubers are making tons of money. There are some, and, they have 1 million followers, and they take advantage of all the little features like.
Well, it's a business for them.
Yeah, the live chats where people can donate, the membership join thing. They have all these like features that you can take advantage of, but I don't know. Like I think like if I were talking about Tesla stock every day, then maybe I would be a lot more lucrative than me just talking about protocols, right?
Right.
So I don't really consider it a business in that sense. I do it mostly for, like I said at the beginning, because I want to know about the things that I'm considering investing in or that I just simply find interesting. Like, this rebasing token stuff you talk about, this is interesting to me. So whether I buy Mark token or participate in these Mark LPs or not, I do think it's interesting that, someone used their logic to figure this out and make this idea, and then let's test it in production, right? And see what happens. I think this is interesting.
Yeah, the reason I first got interested with Mark, but I do see what you're saying. I'm kind of the same way, where a lot of this stuff is just like it's a hobby of mine to just read about. But with Benchmark, I just randomly found them one day. I'm sure you do the same thing on CoinGecko or someone shills it or whatever. And I went through their team, and with crypto, all the teams are developers or programmers, people like that. But the team is actually all like finance people. Like the founder he's a vice president at Citibank. So it was just totally that was like very interesting to me because you don't really see that too often. But yeah, I do
that
see what you're
background,
saying.
yeah.
Yeah.
The background, yeah. I get your point. I heard this actually. I didn't know it was this token. I heard that the guy from Citibank had started an algorithmic stablecoin or stablecoin protocol or something. So yeah, this is interesting. I think I should spend some time on it in the next future if I can find some time to do so. The main thing for me is that like I don't have a whole lot of stablecoins on Ethereum, and I have all these ETH positions just like locked, and I don't want to pull out because it's just gas. Gas is gonna kill me. I kind of like during the DeFi summer, I kind of spreaded my positions around quite a bit. And I've got all these rewards all over the place that are just not economically viable to claim. Kind of sucks.
Yeah, no, I have a very similar situation. I for a while it was a dumb idea, but I'm like pretty paranoid about security, and I actually doxed myself my channel yesterday. Actually, I like revealed my personal email, which was a big oops moment. But
It's all good, but yeah.
I was using like different wallets because I was like, oh, what if this one get hacked? I can have this wallet at least. But I ended up kind of abandoning that and like moving all my funds around. It's just a big waste of gas, really.
Yeah. Like I have like it's really sad too. Like Ethereum should not be like this, and I think everyone would agree that Ethereum, even like Vitalik himself, would probably agree that this problem I have should not be the case. Like I have around maybe $400 or maybe $600. I can't remember. I have to check again. Worth of Badger waiting to be claimed. $600. And I constantly sit there and look at it and go, should I claim that? Should I pay $70? Because if after I claim it, I got to do something with it, right? Whether it be swap, whether it be stick it in one of their vault sets, their sets. I got to do something with those tokens after I claim them, right? I'm not just going to claim them. Why claim them is leave them in my wallet when I can leave them in the contract, right? So it's going to cost me about $200 to do what I need to do with that 600 or 400 or whatever it is right now. That's a problem. You know what I mean? That's not good. If it was $40, $40 worth of Badger, then it's not a problem. But, hundreds of dollars, that's a problem. That's something I think is terrible. Like people cannot use, like I remember when I first came to Ethereum and people were saying, there's no point doing anything on Ethereum unless you have $1,000 worth of something, right? And now it's even worse, right?
Yeah.
Now, of course, they're fixing it. They're working on it, and it will get better. And, if I leave that Badger there and I don't pull it out, then I will eventually be able to claim it again, probably, I assume, for maybe $10, $5 in the future, right? Maybe. We'll see, right? But I'm missing out on all the APY from pulling it out and sticking it into the vault or the set or the LP or whatever. I can't, right? So there's constant this question, and it's too bad, right?
Yeah, I've kind of noticed with DeFi that the whole irony of it, like it's okay, we can make our collateral more efficient, but at the same time we're paying hundreds just to transfer it. It's kind of contradicts itself, but yeah, man, kind of want to wrap this up now. I gotta use the bathroom. Been sitting
Yeah.
here for a long time. I appreciate you coming on,
Yes,
man. I'd
please.
love to talk to you again sometime in the future.
Yeah, it was fun, man. I enjoyed it. We should keep in touch and talk again when we have new things to discuss. But yeah, I appreciate it. Send me links or send me a link of this video and I'll tweet it out as well.
Sure, we'll do.
All right, and that's it.
Okay.
Bye to everyone. Thanks for talking.
See you,
Ciao.
Ceazor. Thanks.
Thanks, Max.
Okay, guys. Let me know if you're still on the stream. I just ended the call.